first of all, I have to ask you, Web 3.0, what does it mean? What are the implications for everyday people and the broader economy?
Good morning. By the way, we're all trying to understand what Web 3.0 is all about, and that's the reason we have this huge conference for 4 days. We won't talk about what is Web 3.0, but let me try to explain that so that I'm sure what I'm explaining today, 4 days from now, it'll be much better. So that's the disclaimer. But let me try to see that I can frame it so that we all get it reasonably right. You know, when internet started, it is all about a machine where you can log in and you can see some information, static information. So a lot of these machines were connected miraculously with some underlying tech protocols, and they're seamlessly peer-to-peer. Now, Web 2.0 is all about when we all decided, you know what, all this thing we're doing in a physical ecosystem, whether it's going to a bank or going to a government services or going to a travel agent, let's digitize that on the internet. So we took that institutional behavior of centralized structures and we replicated on internet. So what we ended up with, because of the growth of data and the scale of platform, huge institutional databases, different databases sitting in for different institutions, and all are having our own information in different form. So whether you go to a bank or on a digital platform, we go to a social media, which essentially is a digitized version of a club, and each of them are holding information. We interact with them. We can provide content to them. They can provide content back to us. Almost a replication of the physical world in the digital version. And now engineers are telling you, wait a minute, we designed the Web 1.1 as a very open source, permissionless, peer-to-peer network. What happened? So let's go back to that state again. Right. So now they're telling we can now connect each other, and hence we have a different construct for Web 3.0.
So a big part of the disruption has been DeFi, right? Decentralized finance. And a big part of that is stripping out your traditional institutional financial intermediaries. Do you embrace that? How do you embrace that and yet control the risks that are involved? Is the MAS considering how it can kind of function alongside that?
So I was coming to that. In the Web 3.0, we are saying this institution may not exist anymore. They are highly centralized, they're intermediary in between. Now, in the world of finance, we have the banks, we have central banks. They all are different institutions, and they have certain role they play in the construct. What the world and the tech community are saying, you can actually get rid of the structures. You can have peer-to-peer people connecting to each other, able to transfer money. They can, all the regulation obligations you have can be programmed on a smart contract, and we can have a very different structure. But well, I must say, This is a technology frame of how things to be done. From MAS perspective, we're also exploring the technology, trying to understand how much it can add value to the existing structure. And I'm sure we'll do a bunch of experiments as we go down this line and find a path where there will be a coexistence of what we have today.
So Singapore right now is trying to be a global crypto hub, right? That seems to be your ambition. How competitive are you against other cities in the world? Just here in New York City, we heard from the mayor-elect, Eric Adams, that he wants schools to start teaching about cryptocurrency and its technology and to build a pipeline of talent.
I think you answered the question in a way. We are focused on what is the technology behind the crypto. I think that's what we are focused now. We are ensuring that we understand the underlying technology, understand the power of that. And that's the big focus of MAS and Singapore right now, to understand the base infrastructure. Especially in the finance, we did a big experiment to understand how to apply this underlying technology in our payment system, especially the cross-border payment system. And that led to the establishment of this company called Partior, where JP Morgan, DBS, and Temasek came together and built that infrastructure. Similarly, we are also looking at how to apply this underlying technology in different use cases as of now. So that's the approach we are taking, and that's how we believe the global market will find Singapore very attractive, especially to build the tech stack.
So many new players, right? Whether it's in the payments industry or the crypto industry, do you see any consolidation in the next couple of years?
Well, that's one of the fintech space which you will see a lot of consolidation is the payment space, because what is happening that the incumbent and the public rails around payment space is becoming far more advanced, and they're actually eliminating the inefficiency we used to have. That's where the fintech payments company were growing. Now, today, you can move money between each other in Singapore at zero cost, 3 clicks. There's no need for a new application to be built. Similarly, when you connect to overseas countries with the new infrastructure getting connected, that inefficiency will go away. So you will see a lot of consolidation. You may see a lot of elimination because that arbitraging, that inefficiency may not exist anymore.
Give us your outlook for new digital banks and also what that would mean for the traditional lending space. Could we see some cannibalizing of this industry?
You will see some cannibalization, absolutely, because the digital bank will be a very digital native. They'll offer the product on your mobile phone. They'll be far more efficient. They'll use tech stack to bring down the cost of transaction. Hence, they'll be more competitive. But we have to see that the trust factor, where does it sit? Today, the trust factor does sit with the incumbent large bank. And will that trust shift to a pure digital bank? If that happens, definitely there's a huge competition in that sector.
How open is Singapore's capital markets for some of these new venture investors?
Well, you see the numbers in Singapore. Last year, we had $1 billion plus investment in the sector. This year, $3 billion, almost 3 times the numbers are growing. So VCs and investors are deeply entrenched in this space because that's the future. They are willing to put risk capital beyond new ideas, especially post-COVID. There's a huge demand for digitizing this financial services, or even the SMEs who are connected to the financial services. So you will see a lot of these companies getting access to capital. The growth is way big than what is happening now. So there's a long path to growth. So there'll be a lot of investment to this opportunity, which this fintechs and the banks and the collaboration, whether it is embedded finance or the extended finance, whatever it is, there'll be a lot of attraction for the VCs to invest in.
Sopnendu, given right now what we're seeing with China starting to ban these transactions of cryptocurrencies, do they risk falling behind in this global trend by not embracing what this technology can offer?
I think we are embracing the technology, but in many ways. If you look at in Singapore, there are many use cases in trade finance, in fractionalizing bonds, in capital market. You see a lot of adoption happening in bits and pieces. I think from a technology adoption, I don't see much of risk, but I think we should not confuse that with the cryptocurrency, which is a speculative asset. I think there is a whole set of issues out there, but purely on the tech part of that, there's adoption, there's a effort being made to understand this technology and how to apply in different sectors. So I don't think we collectively, the world will move faster in this space. But keep aside the digital currency, which is under a lot of debate, a lot of question, a lot of speculation, and that is its own journey.